Assets must be tested for impairment annually. When determining if an impairment loss should be recognized, the recoverable amount of the asset needs to be compared to the carrying amount, and where the recoverable amount is less than the carrying amount, an impairment loss must be recorded. However, in practice, it is difficult, time-consuming, and an expensive exercise to determine the recoverable amount of assets. So the general rule in terms of IAS 36 is that assets must first be tested for any indication of impairment. If there are no indications of impairment, then no further action is required. Only if there are indications of impairment does IAS 36 require that the recoverable amount of the asset need to be determined. The recoverable amount is the higher of the value in use and the fair value less costs of disposal. The exception to this general rule applies to goodwill and certain intangible assets. The exception requires that the recoverable amount be estimated formally at least once a year, irrespective of whether or not there are any indications of impairment. There are two reasons for this. The first is that such assets are not amortized over its useful life. And the second is that it is difficult to prove that intangible assets not in use will generate sufficient economic benefits to recover its carrying amount. Considering the costs of this exercise, IAS 36 allows for the previous formal calculation of the recoverable amount of goodwill and certain intangible assets to be used again in the current year when the following requirements are met. 1. The cash flow generated from the intangible assets are related to other assets that have been tested for impairment as part of a cash generating unit or CGU, and the assets and liabilities making up that CGU have not changed significantly. 2. The most recent recoverable amount calculation exceeded the assets carrying amount by a significant amount. And 3. Analysis of events and circumstances since the last recoverable amount calculation indicate that it is not likely that the recoverable amount will be less than the assets carrying amount. If all three requirements are satisfied, the entity can then use the most recent recoverable amount calculation in the current year. To recap, the general rule is that assets should first be tested for indications of impairment, and only once this is evident should the recoverable amount be determined. The exception to this rule relates to goodwill and certain intangible assets that require the recoverable amount to be formally estimated annually. The most recent recoverable amount calculation can be used in the current year provided the three requirements of IAS 36, paragraph 24 are satisfied.